Hello, good afternoon everyone. My name is Michael Haverty. I'm a senior agricultural economist with Andersons. We provide business information to companies involved in the agricultural industry. We also advise approximately 5,000 farmers amongst the group as a whole day to day as well. So what I'm going to focus on for the next 15 or 20 minutes is the application of big data in agricultural supply chains. Some of the key trends to note, and this will be in particular from a farm level perspective. So just in terms of the key trends that we'll cover, we'll look at profitability and exchange rates in some more detail. And as a number of speakers have already mentioned, Brexit is looming large at the moment. Going to look at some of the trade patterns and some of the things to be aware of in that context. Then we will focus on big data and what's important to farmers in the context of the application of big data, which will be relevant for some companies here today. And then we will give our perspective on how companies can support the development of big data in agriculture, some ideas and concepts to consider. So moving on to the farm level profitability. And the measure that we take to assess profitability in farming is a measure what's called the total income from farming. So it takes into account the aggregate returns to a farmer entrepreneur across the agricultural and food industry in the UK, takes account of their capital, labour management. So it really is a measurement of profitability within the agricultural sector as a whole. So this chart outlines the trends since 1990, and you can see in the years 2008 to 2014, actually the performance was quite good, and at that time commodity prices were quite high, which of course helped the agricultural sector. But since then we've seen a decline. In 2015, and that's the latest estimate that's up there at the moment, the decline has been quite significant as a result of oversupply in agricultural sectors globally, and that having implications for prices as well. And we see that trend continuing into 2016. But as the previous speaker alluded to, what has happened in the last week and a half will have significant implications, both in the short and into the long term. I've just included a line up here in the chart just to outline the direct support that is coming into UK agriculture from the EU's Common Agricultural Policy. And you can see that accounts for a significant proportion of the profitability or total income from farming figure. So what happens in the long term with regards to the Common Agricultural Policy and the payments to farmers will have significant implications for the agricultural sector as a whole. Not just farmers, but for those who are involved in the food industry supply chain as well. So with regards to the future and what has happened as a result of Brexit, well, actually there are some positives to take here for the farming sector in the short term potentially. We know that sterling has weakened significantly recently. That will make exports more competitive on the global market. Also, direct support payments to farmers are denominated initially in euros and then converted into sterling at September of each year. So again, if that euro is stronger vis-à-vis a weaker sterling, that will actually mean farmers' direct support payments will go up. And there may be opportunities starting to emerge to attract business amongst non-EU clients into the future as well. There are negatives as well arising from what has happened. Input prices, particularly fertiliser, which is imported into the UK in significant volumes, they're likely to rise, again, as a result of the exchange rate effect. We've also got the introduction of the national living wage to contend with, so that is likely to increase labour costs. And there is a big question mark around relationships with EU clients. If we take the sheep meat sector, for example, where a lot of lamb is exported into France, what will the implications of that be as a result of what has happened in the last week or so? And that's a big unknown and is to be found out, I suppose, in the coming months and years. So I've mentioned currency quite a bit and the exchange rates. And what we've done here with this chart is we've outlined the total income from farming TIF on a per entrepreneur basis, and we've plotted that against the exchange rate trends. And what you can see actually is there's quite a close correlation between the two. And some of the research that we done at Anderson's a couple of years back suggests that approximately 60% of the variation in farm incomes is down to exchange rate movements. So it is a very important driver. And as we go into 2016, these estimates were compiled before June 23rd. It is likely that the income from farming will start to increase due to the factors that I've mentioned already in the context of a more competitive export sector and improved direct support payments. What will happen in the long term is very much in question. And in that context, this chart here just outlines the situation for agricultural trade between the UK and EU and non-EU countries, comparing the agricultural sector with all goods in the UK economy. I think there's one key point to highlight here is that the agricultural sector is very much reliant on trade with the European Union. If we look at imports, it's more than 70% of them come from EU countries, Ireland, Netherlands, France, Germany being the key ones. If you also look at exports as well, more than 60% of them go to European Union member states. If you compare that with the economy as a whole, where there's very much a 50-50 split, you can see that the agricultural sector is exposed, and what will happen as a result of the negotiations will have major implications for agriculture. So for companies involved in the agri-food sector, I would just identify that as being one of the potential risk factors to take account of in the coming years as you interact with the sector. So having highlighted them trends, now just going to outline in the context of big data some of the points I think is particularly important to farmers and I think would be relevant for companies and organisations here today. The first one won't surprise you. Transparency concerning the usage of farmers' data. And I'll link in with this concerns around confidentiality and particularly for farmers how their data is being used. They're quite paranoid, and rightly so I would say, that they don't want to see their data being taken from the farm and being used against them in some format, whether that's being used by traders in a financial sector so that they can bet against agricultural commodity prices. Farmers are very paranoid about that. So for companies, again, looking to interact with farmers, I think you need to be open with them. You need to outline very clearly what their data is being used for, what it's not being used for, as a means to get interaction. If you fail to do that, I think you'll find that farmers will be very hesitant and some of them will just point blank refuse to interact with you. In addition to that, another concern for farmers is, does all of these big data, precision agriculture, does it generate a return on investment for the farmers? And in addition to that, where is the evidence? Farmers and the agricultural sector generally is quite used to getting independent trials undertaken based on new technologies, new products that are introduced. So sometimes companies just basing it on their own research only, that might not be sufficient to convince farmers. You'll have a much better chance if you get an independent organisation to conduct independent trials and to see what results that yields and whether there is a return or whether it is profitable. In addition to that, farmers, being very practical people, they want to ensure if they're going to take on new applications that they're user-friendly, that they can be plug and played and integrated into their existing systems very easily. Farmers are not that IT savvy in general, and once again, it needs to be simple, intuitive, make sense. Without doing that, you will lose most of the farmers in your efforts in order to gain traction. And linked with that point, there is a key aspect here as to what do farmers' key advisors think about the new offerings that will be introduced. There was some very good research conducted a few years back by the Agricultural Industries Confederation, this ring of confidence model, and it outlined that farmers actually have a close group of advisors that they rely heavily on for advice. They're almost seen as an extension of their management team. And I've highlighted a few key ones here with regards to the arable sector. So agronomists and crop advisors are particularly important, for instance. Also contractors, other farmers as well are important, and farmers do take their opinions into account. In the livestock sector, vets in some respects can be seen as a key advisor. So for companies looking to interact with farmers, get farmers' data, I think influencing these core advisors and identifying which advisors are most relevant for yourselves is important, and it should be something that should be at the foremost of your mind if you wish to gain traction within the sector. And there's also an outer layer of advisors as well, which farmers arguably pay less attention to. And again, new companies coming into the food sector, into the agri-food sector, are probably in this category. And you need to see how you can get traction and get to that inner core of advisors before getting to the farmers themselves. So now just include some points just based on observations from Anderson's research over the last couple of years as to how big data providers can support the sector. And the first one, and the previous speaker alluded to previously, is to focus on the value and not the volume. We've seen that there are vast amounts of big data and information available, and a lot of it is on a nice-to-have basis. But actually, if you're a farmer, if you're somebody advising the farmer, you need to see, well, what return is that generating for me? And I've just kind of elaborated on that with an example, if you will, just looking at wheat and the costs of production per tonne of wheat in the UK. So we've got here a medium cost producer and a high cost producer of wheat, and we're looking at the cost per tonne based on different yield levels. So if we took 8 tonnes per hectare at the moment, and a medium cost producer, it's about £125 per tonne, with wheat prices being at the farm level in or around £120 a tonne, they're not breaking even. And the higher cost producer, it's even worse situation. It's only when you get to the higher yield levels that you actually start to generate a return. And moving that over towards the yield map on the right-hand side of the screen, you can see that this field here, there are areas that are higher yielding, some are lower yielding and not making that much of a profit. And this situation is reflective not just in individual fields but also across farms as well. There are profitable and non-profitable areas. And from a farmer's perspective, the key question is, can them underperforming areas be improved? What can be done in order to improve the performance? And for companies such as yourselves, you may be able to provide help in identifying those non-profitable areas. But what really gets the results is, can farmers be assisted in improving the overall performance? If performance cannot be improved, then obviously the farmer is better off probably not cropping them areas. So there are some of the key concerns from a farmer perspective, just looking at that value volume question. And I think it's very important always to keep in mind what is the value to the farmer or to your customer generally. Some other points to note. Paying attention to how customers or farmers use the products in practice. We all know, and it's quite an obvious point, that what people say they do versus what they actually do are two very different things. And at a farm level, and I would say at a factory level as well, one needs to take account of what technologies are being used at the moment. If we use a sprayer, for example, a standard sprayer in a farm in the UK, we hear a lot of talk about precision agriculture, being able to isolate the crop and go down into the detail of the crop. But that technology, whilst it's all well and good, if the farmer is operating a sprayer that doesn't get near to that level of accuracy, then in many respects, what is the point for that farmer to employ that technology? And for companies such as yourselves maybe getting into that sector, you need to identify them challenges and see how you can help the sector to overcome those challenges so that your products and services will help the farmer as opposed to hindering them or adding an extra layer of cost. And linked with that, based on the point I've made previously, again, can these offerings, these new offerings, be easily integrated with existing systems that are already in place? And it probably leads on to my next point. And again, a number of speakers here today have mentioned about it. Collaborating. Don't reinvent the wheel. If we look at an agricultural sector, there's a lot of platforms and systems out there at the moment, a number of different drone suppliers trying to get into the sector, a lot of other companies trying to develop their own systems. There is very much a danger of the wheel being reinvented all the time. And when push comes to shove, there's probably only a few of them systems that are actually going to work. So from our perspective, and this is based on some research conducted by PA Consulting, it's worthwhile to focus on which parts of the big data value network you as a company are going to focus on. Some companies will be better suited to focusing on the algorithms. Others will be better suited to looking at the hardware and hardware, be it in terms of technology or smart farming, for instance, and others will be able to bring platforms into play. So I think from your company's perspective, it's very important to focus on which parts of the value network you add value to, and in the areas where you have weaknesses or gaps, seek to collaborate. Use conferences such as this, for instance, to identify stakeholders that you can partner with so that you can bring a better overall solution to the table and to farmers. And in that vein, from an Anderson's perspective and how we could potentially support companies such as yourselves here today, we're very much focused on the economic aspects of big data and using that to help in the decision making on farm. So some of the offerings that we have to support you, we provide professional briefings to keep you informed as to what's happening in terms of the main trends in UK agriculture, available in a few different formats, online being one of them. And also, in the next months and years, the role of policy is particularly important. And we have a number of years' experience looking at the impact of agricultural policy, both at the farm level, but also in the supply chain as well. And as a British agricultural policy starts to emerge after Brexit, I think that will become particularly important. Also in September, we are going to run a series of seminars across the country that will look at detail at the impact of Brexit on each agricultural sector. So we will look at the legal side of things, the implications for trade, the implications for policy, and also within the agricultural subsectors. What's happening at the arable farm? What are the implications of Brexit likely to be in the short and long term? The livestock, and as well the services, professional services and companies involved in assisting and advising agriculture, what will the implications for them be, as well as the implications for the wider agricultural supply chain. So them details will be announced quite soon, so please visit the Anderson Centre website for that information. And apart from that, we also, as I've mentioned, help companies understand how big data can impact on the farm level economics. We're conducting a number of return on investment models at the moment, looking at changes to the agricultural supply chain and how big data can help with that. And we can also help with quantifying the market potential of new products and services as well. So that gives a flavour of some of the key trends that we've observed in terms of agriculture and the application of big data in that context. I'd like to thank you very much for your attention. If we have time to take one or two questions, I can do so now, or else please feel free to speak with me after the presentation.